And the trade manager is basically once we had a new internal low on break even, we trim 50% at 3R at this point, right about here. And then in this case, we were able to hold runners to catch a full second TP at 10R to realize 6.5R on this specific example. So yeah, thanks everyone for joining today. For those of you that haven't been on these lives before, you'll see me in the Discord as Ox Fibonacci. I'm the replay pro for FX Replay. It really just means I've been backtesting a lot. I've recorded over 5,000 trades, backtesting all kinds of different strategies. And yeah, definitely excited to kind of share you guys this new strategy. We've got a lot of requests from people with Waqar Asim's Forex scalping strategy. And so I'm going to plan on kind of going over the strategy, you know, to what to expect. I'm going to kind of share what I found from his strategy, just looking through his YouTube videos. He's got a few pretty good ones. He says it's a supposed 69% win rates. We'll break down kind of what are the mechanical rules that I found for it, and then we'll actually dive into FX Replay and do some backtesting. So at any point, you know, feel free to type in the chat if you guys have any questions about any of the concepts I'm going over, how to use FX Replay itself. This is just kind of a demo, also showing you how to use the platform. So yeah, feel free to type in the chat at any point. And yeah, let's go ahead and dive in. So we're going to start with some kind of educational components. The first one being what he calls decisional supply and demand. And supply and demand's, you know, a very commonly used concept. You know, we've tested Burns' model, Doyle's model. You know, there's tons of different supply and demand strategies out there. And the main thing with these decisional supply and demand levels, it's really kind of the levels are really like before these big, kind of at the start of these big moves. And these are going to be the higher probability supply and demand levels rather than kind of ones that are like along the way, which we'll see like kind of, you know, Burned and Doyle. We have also used some of those kind of intermittent supply and demand levels along the way. He likes to really just use these ones at the start of these big impulsive moves. So that's kind of what we'll be using to mark out potential high probability reversal areas. But honestly, the single most important concept of his strategy is this concept of inducement. And it's not something I've gone over. Justin Weirland's Forever model, we also use a little element of it, but I want to spend a little time actually like going through what inducement exactly is, because it's a really powerful concept. And so really all it is a low time frame liquidity sweep that's followed by a break in structure. Sometimes it's into a high time frame point of interest, like this image right here. You know, maybe we had a high time frame fair value gap, we saw inducement, and then, you know, a continuation on the high time frame. This is kind of also how he showed some examples of what it can look like. You know, you have a buildup of low time frame liquidity. Sometimes it's relative equal highs, sometimes it's not. Sometimes it's just like an intermittent higher low, but you basically sweep that initial kind of internal, like I said, low time frame liquidity, and then you form a break of structure pretty quickly. So it's his core concept is build up, inducement, break of structure. So that's like something you can use to kind of remember this. So build up, inducement, break of structure. That's kind of how he likes to refer to it. And the cool thing about this is not only are we going to use it for our specific entries, but we're also going to look at like past and recent inducements. You know, what has happened to really identify you know, who's in control, the buyers or the sellers. If price is moving, you know, I'll show you some examples in the future, but inducement is really helpful to see kind of the trend on a high time frame as well. He also uses concepts like market structure breaks or breaks in structures. It's really just a candle closing beyond the kind of recent wick high or low. A break of structure can be to either side, but a market structure break is, you know, if price has been trending to the downside and you see a break of structure to the upside, that's called a market structure break. They're kind of the same thing. I usually refer to as break of structure because it's, you know, both ways, but the difference between them two is a market structure break is kind of a reversal of the trend. And then you guys are probably pretty familiar with the concept of ICT's premium and discount. We'll actually be using this as an invalidation criteria for the model, so we'll kind of keep this in mind as a video. Yeah, let's talk about the specific strategy details. We're going to be trading EU and GU, and again, to try and simplify this a little bit more, in his videos you might see he uses the daily time frame, the 4-hour time frame, the 1-hour time frame. He uses a lot of different time frames to look at a lot of different things, you know, SMC, traps, all that stuff. For today, I think I really just want to focus on 3 time frames in particular. We're going to use the 1 hour to identify those high time frame supply and demand levels. I think the 15-minute is something that he uses fairly often, and it's a little easier to see those inducements to help identify the trend. And then we're actually going to be using the 1 minute for execution pretty consistently across the board, not 1, 3, and 5 like Forever model, just 1 minute for all execution. And similar, as I explained to you guys in the quarterly theory strategy testing, it's going to be really important for this Forex scalping model to use a really low spread broker. I think he uses like 3 to 7 pip stop losses, so you really have to have a really low spread Forex broker with no spreads or like 0.1, 0.2 pips. If you are trading with a low spread broker, that's usually more of like a live funded account. There may be some prop firms that offer it, but most prop firms you're dealing with like 2-3 pip spreads. It's just it's not tight enough for this scalping model. And then he also, in order to be very selective when he trades, he generally has kind of 2 1-hour trading windows that he'll see. I don't know if I have them right here. He has these kind of gray shaded areas on his chart that he marks out for the highest probability times to trade this strategy. And that is basically the first hour of London Open, 8 to 9 a.m. And then also the kind of first hour of New York Open. It's actually a little bit pre-market. So basically 9 to 10 New York time is kind of 3 to 4. 3 to 4 and 9 to 10 New York time, or 8 to 9 and 2 to 3 London time, are basically 2 hours he trades. And you will see, I literally have it right here. This example, it was a little bit after the fact, but I think he said this was like a C plus trade example or something, just because it was after his window and some other reasons. So we're going to stick to kind of that core, these 2 1-hour trading windows for the highest probability setups. And then let's dive into how to actually identify this strategy. So the first thing we're going to try to identify is like, what is the recent trend? Are we coming into any high time frame supply and demand levels for potential reversals? So this is a good visual to show you guys like how to see like how the inducements can kind of show you who's in control. Obviously, you can just look at this chart and see it's trending to the upsides. This is a pretty clear example. But these inducements really help you get another level of detail. You can see like we're sweeping these kind of low time frame levels and seeing break structure. Sweep the low time frame low and break structure. So there's multiple inducements to the upside where we have kind of that low time frame sweep and a break structure. It's continuing to the upside. And same thing here. For some examples to the downside, we have some local highs being swept, break structure to the downside, local highs swept, break structure. So often price will kind of build up some liquidity, sweep it, and before it continues. Some pairs do it more than others. I think Euro is a great pair that does it pretty often. And so it's just a really good like visual to help you try to get a better picture of who's in control. You might see also when people talk about, is price going to continue or reverse at kind of a key level, they like to see, are these 1 hour, 4 hour daily candles closing past that level or failing to displace. And so it's the same concept here. Instead of seeing, really strong breakout and continuation, we're failing to displace these levels and seeing those reversals. So it's just basically showing you buyers are in control versus sellers are in control. So it's a great way to visualize it. And then for the specific entry model, after you've identified the trend or identified a potential reversal zone, if price comes into a demand zone, you're looking for maybe a reversal long. If price comes into a supply zone, you might be interested in a potential short, regardless of what the kind of high time frame trend's going on. But once you've identified who's in control of price, where is it likely to head next, the main thing we're looking for is inducement, a break of structure, and then a retracement to the low time frame supply and demand. So you can see right here, we have all three of those things. We have this inducement of this kind of low time frame level, a break of structure to the downside, and then a retrace into this low time frame supply level. That's where your entry is. It's going to be a limit order. And I'll tell you guys, we're going to have some pretty tight stop losses on this. And for his stop loss specifically, again, he's very data driven, and he's analyzed that the typical average London session move is about 15 to 20 pips. And so in order to catch maybe a 3 to 1 in a session, he uses really tight stops between 3 to 7 pips. From all of his examples, I couldn't see like a super clear mechanical definition of where to put those stops. Sometimes it was the local high, sometimes it was, the most recent high, sometimes it was just the other side of the supply and demand level. And so for simplicity, I'm just going to use a 5 pip stop loss today. Again, this is something you could optimize, but it also makes the take profit and trade management a little easier. So you can kind of see when to take the different levels. So there is a little bit of specificity with the take profit and trade management. So from all the data he's analyzed, he says 3R and 10R are kind of the best thresholds to take partials with the strategy. So what he does is typically takes 50% off at 3R to realize 1.5R, and then tries to hold the rest for 10R for a potential additional 5R. So 6.5R total if it catches that 10R threshold. And then if you're not confident in that 10-hour target. Maybe it's kind of a counter trend trade and you just don't feel super confident it's going to go all that way. He did say there's sometimes you can just take the full thing off at 3R. So I might use a little discretion and decide to do that a couple times today. And then he has some trade management where he will actually have a pretty aggressive break-even method, which saves him from a lot of losses. Where basically after price creates a new internal higher low, he'll go break even, whether it's a long or a short. And so in this case, it saves him, even if he has the wrong bias, sometimes he'll still be able to catch that 3R trim, or even if it comes back break even on him, he's able to protect his win rates by going break even a little aggressively. And as we know now with FX Replay's risk to reward simulator, it's going to be really great to maybe trade it like he does, and then after the fact we can look at the risk to reward simulator and see, like, is this the best way to trade this? Would it be better to have no break evens and just kind of hold to certain levels, win or loss, and then you can model different things. But this is how he trades it, so that's how I'm going to trade it today. And then lastly, I kind of want to go over some rules, and the main thing I want to tell you guys is, like, most days there aren't any trades with this. Like, he has this video. It was like almost a full hour. I think he took like 2 trades when he was kind of backtesting with TradingView or something. And so he's super patient with this model. He says a restricted trader is a profitable trader. So he has a very specific windows he trades, very specific criteria he's looking for. He also has some additional confluences and invalidations. So a lot of things to really try and make sure when he's putting on the risk, it's in a high probability situation. He did say an added confluence for these trades is SMT divergence with GBP USD. I'm probably not going to use that today just to keep things a little simpler, but as you're really optimizing this, that's definitely something you can pull in and try to look for the cracks and correlations. Like, again, quarterly theory, I have a masterclass on SMT divergence if you want to review that, but that's a great confluence to make it even a higher probability. And then he has kind of an invalidation if price moves too far before tapping him into the trade. So maybe in this case, maybe there was an inducement, but it didn't come all the way into this demand level and just kind of took off, or there was no inducement. He will cancel the limit order because he says it's lower probability if the kind of average session move already happens before tagging you in. So that's kind of an invalidation. Sometimes the price will just take off without us, and that's totally fine. And then he will also kind of mark out Asia session on his chart. I don't know if I have it here. You can't really see it, but he'll mark out Asia session basically between midnight and 6 a.m. UK time, or basically 1900 to 1 a.m. New York time, just for some additional context. Often after you see session liquidity sweeps, you'll get potential reversals as well. So it's just kind of an additional context he has. So I have the checklist for you guys. You can definitely, use this to try and make sure you're going through all the steps as you're identifying the trades. But let's look at a couple examples, and then we'll dive into actual backtesting. So this is kind of one of those trade continuation examples where, okay, I've identified the sellers at control. We have multiple inducements, breaks of structure to the downside. But most recently, we have kind of a break of structure or inducement break of structure to the downside. And we're coming into, I think this is London session during our 1 hour trade window. I've noticed that I have this really nice supply level that has, it could have a potential inducement if we take out these relative equal highs. So I've just put my limit orders at this supply level retest, just using a 5 pip stop loss. And the trade manager is basically, once we had a new internal low, I want break even. We trim 50% at 3R at this point, right about here. And then in this case, we were able to hold runners to catch a full second TP at 10R to realize 6.5R on this specific example. This doesn't happen all the time. Most of the time it's break even. It's maybe 1.5R, then break even. Like I said, sometimes you could take the full thing at 3R, but this is a great example where you can catch that full move. Sometimes it takes both London and New York session, but great inducement, break of structure, and kind of retest with that inducement criteria. This is an example where we were coming into a 1 hour decisional demand level and expecting some kind of reversal. And so how to trade this, again, we wanted to identify price coming into the decisional demand. Then we had a break of structure with the candle closing above a kind of local swing high. And after that point, once we got to make sure we're in our kind of 1 hour trade window, we had a nice demand level, kind of these 2 red candles before the move up. You could just place a limit order on a retrace into that demand, 5 pip stop loss. Went break even here after this kind of swing high was taken. And again, you could have either gone a full TP at 3R here or trimmed half and the rest would come break even. But a couple examples there. One, just trend continuation. You're expecting price to continue. There's no decisional demand. You're expecting a reversal, or you have identified a potential reversal zone, and now you're looking to trade that with the same model. So again, those are kind of two great examples, and now I really want to dive into kind of backtesting with you guys. So I've been testing this out a little bit, but let's go ahead and create a fresh session for you guys. I'll probably ask you guys in the chats. I'm gonna finish filling this out, but someone let me know in the chat like a random date in the last I don't know, 3 years. Just throw out like a random date in the chat, and I'll use that for this test. So someone let me know in the chat when you guys want to test this. So all right, we got a date. So it's November 26, 2024. Someone from the chat shared. So November 26th. Here we go. And we'll go the day before, so I can just, when I play the next day, it'll start at the right point. So we'll see how much we can get through. And try and go through several days. Hopefully we get through at least a few trades. Again, he's very selective with this, so we're gonna have a lot of days where we don't do anything, but that's totally fine. So I think I have everything I need. The first thing I'm gonna do coming into this fresh is just draw out some of those decisional supply and demand levels. I like to use either the rectangle tool or the parallel channel. You can kind of see some clear levels. So I'm just really trying to identify what are kind of some really key levels before price really starts taking off, both to the downside and upside. So kind of last green candle before big move to the downside. These are potential decisional supply zones. If price comes into these, we could potentially have some reversal. I'll kind of draw a few going up. Like I said, last green candle before price move to the downside. And maybe one more right here. So I have a few potential supply zones. If price is to come up into these, could be potential reversals. So I'm going to add this session indicator in New York by FX Replay. And I'll show you guys kind of how I would set up. So I have New York session from 9 to 10. Then I'm going to 1 hour trade window, and then London session 3 to 4. I think I removed all the lines and just kind of made them gray like he does. So we kind of have all of our trading windows on the chart. And now we have everything we need. So I'm going to be going to London, New York session. So I have these kind of saved out. I'll go to London session for this kind of start of the day. And let's kind of see what is the recent information showing us for, how to trade this next day. And I like to go down to 15-minute time frame for this context. So we have tapped into this daily demand zone. So we did see a initial reaction off of this, but let's see what's going on the kind of recent low time frames. So as you can see, we did have that initial push up and created a nice gap here. And then in terms of inducements, it's not super clear right now. We have like swept some internal highs, but we haven't formed breaks of structure following them. So there's not really like a super clear trend bias on this day. And days like this, as a good example to preface, like if you are not clear in the directional bias from analyzing recent inducements, from analyzing your supply and demand zones, sit on your hands and trade another day. Like there's going to be more clear opportunities. And so this is a day coming into this that I'm not super clear. I'd like to see more information. So I'm going to go to New York session the next day, and already I have like a much better picture to paint. So we had a recent inducement right here where price kind of swept these internal lows, just about filled this entire gap from kind of a new week opening gap. And then we saw clear breaks of structure to the upside. So inducement, I like to use the circle for the inducements, break of structure to the upside. And we could potentially expect that to continue moving forward now that we've kind of been reacting to this 1 hour level. So coming to this day, I'm interested in potential inducements and reversals to the upside. Maybe we have this level right here. We could potentially look for an inducement. But that's kind of my game plan. I've seen some reaction to a high time frame level. I've seen a recent inducement to the upside, and now we can potentially look for that to continue. So we've got a sweep at this level right here. Let's see if we can get a reaction to it. Okay. And I like to start with a 15-minute because you need to see at least some reaction before you entry. So at this point, I'll kind of zoom in on the 1 minute time frame and show you guys kind of what this looks like. So we had our inducements. Price took out this kind of previous low that I marked out on the 15 minutes. We also have a nice break of structure right here with price closing barely closing above. And so let's see if we can catch a retrace into this demand level down here. And again, I'm just using this kind of last red candle before the move up to mark a potential supply zone, or sorry, demand zone. I have this these templates save out, which is like a 5 pip stop loss, 3-to-1. If you want to look at the specific settings, I think I just have in here. Yeah, it's basically 5 ticks to the downside. It's multiplied by 10. It looks like, but I basically have a 5 pip stop loss. You can see right here, 15 pip take profits, and so it's really easy with the drawing tool. Just use it as a template. And I know one of you asking how to actually take the trade. So usually I will use these long short positions, place, where do I want to put my stop, where do I want to take my my take profit, and then when I use this place order dialog, I like to always use 1% of initial balance, but you can kind of customize this however you want. Maybe you want to use more or less. For backtesting, I always like to use 1% of initial balance. Every 1% I make is 1R. It makes the analytics really easy to identify. And then since I'm using that 5 pip stop loss, all I want to do here is, if I want to take those, the partials as he does, I'll just kind of come in here and change the second partial to 50 pips. So we're taking 50% off at the 3R level and 50% off at the 1R level. I've been going break even manually, and I'll show you guys how to do this. So it's a little quicker just to do it manually. But we have that set, and you'll see here after I click it, we have all of our levels identified. I actually really like this 10R take profit. It lines up with these relative equal highs, and our expectation is continuation based on the recent price analysis. So I'm super happy to attempt 10R on this, and then I'll show you guys how the execution works once we get tapped in. So we got tagged in during the 1 hour window, so this kind of 9 to 10 window in New York session, 2 to 3 p.m. London session. Let's see if we can get a reversal to the upside. Okay, we've gotten now a new internal high. So it's pretty close to our entry. I have a feeling we'll probably get stopped out break even on this, but using his aggressive break even methodology, we have taken out a new internal high here. So this, I believe, is generally where he will go break even to protect himself from downside. So maybe that's not the best. We'll find out if it was good for this trade or not. But in order to protect our win rate, we're going to go break even after we have new internal highs. And all I do is just double click the stop loss and moves it right to break even. And we'll see. Yeah, we got topped out break even. Looks like it might have not been the best thing for this specific trade. But if we had the wrong bias, actually, let's see. Okay, we wouldn't have actually hit our 3R take profit anyways. So the break even, even though we could have potentially caught a little bit, I think up to 2.76R, it wouldn't have hit our trim. So the break even saved us from a loss. And so that's kind of how we executed. But hopefully that shows you the actual trade execution. I don't have the specific data on how many of his trades are break even, so that's something we'll collect over time. But overall, pretty happy with our decisions. Break even trade doesn't hurt the account at all, and so we'll just go on to the next session. So I'm gonna go to the next London session now and see what we're looking at now. So honestly, still kind of feeling the same bias. Let's see if inducement shows me otherwise. So we have kind of taken these levels and again formed some low time frame breaks to the upside. I do still think those we have really strong liquidity actually from these relative equal highs. And this is, again, I'll just probably use the light blue. These relative equal highs are a good draw on liquidity. It's just something I've learned from other stuff. He doesn't require this for his model. It's just something I use to help identify bias. So I still feel pretty good about looking for longs coming into this next session. But I need to see some inducement. I'm not sure we'll get it in London session. I usually just kind of play some 15-minute candles forward and see, maybe there was a trade in kind of pre-market London, maybe down here. Once we induce these levels, you can kind of see we took out this internal liquidity, formed that inducement, and then had a really nice breakage structure. So with his model, we could have had a potential trade, like I said, outside of our session with the criteria, but we didn't have any inducements whatsoever leading into the session. And, even going on the 1 minute time frame coming into London, we haven't really swept any internal lows. Like if we had taken these lows here, maybe we could have looked for his model. But there's really no inducements. So it just doesn't fit his criteria. We still have this high intact. So maybe in New York session, we can kind of see something, but there's no inducement in London. So we'll just go to the next session. And unfortunately, had the right idea, just didn't meet his specific criteria. And this happens quite a lot. Like I said, he went through this video a lot and he didn't take trades every day, but often this framework is actually pretty helpful for bias. Again, I will admit I am not the best at high time frame directional bias, but using this concept of inducement and kind of decisional supply and demand levels is actually pretty good. Not gonna lie, and for identifying the kind of draws on liquidity. So general expectation now is continuation up to these supply levels. I actually want the drawing tool where we got brush. So I'm expecting maybe reversal here, maybe reversal here. But until we hit those levels, I'm looking for continuation to the upside. And so that's kind of the game plan. And I'm going to look for maybe if we have any low time, any inducements, we can catch along. Otherwise, I'm waiting for these tapped for potential shorts. So again, I like to just play forward 15-minute candles to see if there's any inducements. We need to see some sort of structure created so that we can induce it first. So again, this New York window, there's really nothing going on. We're kind of just building that internal liquidity. So no trades during his specific session. Let me zoom in a little bit for you guys. I know I've got a big screen, but I'll try and make this a little clearer. So we need to see some form of inducement. So just go to next London session and see if we have a little more context we can look at. So again, 15-minute time frame, we have been kind of building up, consolidating a little bit, building up some structure, and we've recently took out this low. So induce and build. And again, you can use these templates again to just kind of use draw these however you want, but we have taken this 15-minute low now. So I'm definitely interested in potentially hopping in this and see if we have a break of structure. It's not the best. We have kind of, this is just like a straight move down. There was a very tiny high here. We'll give it a shot. Again, it's going to be better if we have, a clear kind of structure, and then we break that structure. Like it's a little more obvious than just kind of this singular candle that moved up a little bit. So I don't know, maybe I'll use this internal one. There's just really not any great levels to look for a break of structure. But it's in line with my kind of trade criteria at least. So we'll say this was a break of structure. It's not the best for sure, but we'll at least give it a shot and use this kind of last red candle before the move up as our potential demand entry. And I got a question in the chat. Is this Photon SMC strategy? No, this is a Waqar Asim's Forex scalping strategy where he uses inducements to kind of identify where to hop in, kind of high probability continuations or reversals. I went over the full strategy at the beginning, so definitely feel free to catch the replay. And I put actually the PDF in the chat. If you guys are watching the replay, you can just get the PDF in the description. But yeah, it's Waqar Asim's Forex scalping strategy. So I'm interested in taking this trade. Again, just using this kind of 1 to 3 with a 5 pip stop loss. So I'll place an order. I think I'm still okay going for the potential. Actually, I don't know. We'll see where the 10R is on this chart. It is before this decisional supply level, so I think I'm okay taking this. If this second TP was like way up here or something, I might just go for the simple 3 to 1 because I'm expecting maybe some kind of reversal here. But I think I'm okay potentially holding out for the 10R. So we'll see if we get tapped in. Wow, literally first candle of London Open we got tagged in. So let's see if we take out this internal high to go BE. I actually use this kind of gray one right here. All right, unfortunately got a loss here. Not worries at all. I think he said 69% win rate with this strategy from all he's tested. I'll show you guys kind of what I was seeing just from my limited sample size. But yeah, no worries. We did have a really nice reaction to it. Unfortunately, just no follow through. So there's definitely going to be losses with every strategy. And maybe there's some additional lows here. Again, we can kind of wait and see if we get any kind of reaction. Okay. This could still be, we could maybe have a second attempt. So this could actually be a more clear break of structure now if we now take out this high. So let's see if we can form a clear break of structure. Really nothing yet. We're still in London session, so we still have some time. I'm looking for that break of structure to the upside. There we go. So it took a while, but we finally now have a more clear break of structure. And again, this one might have been influenced by the fact that, like I said, this wasn't like a super clear break of structure. If anything, this is like a pretty strong imbalance. If probably 5-minute time frame is where we'll actually see it. We rejected off these fair value gaps. So without having that clear kind of structure to see that we really had a break of structure, this was like a like not the best breaking structure, whereas this one is much more clear. We have a clear high, we have closed below it, so I feel much more confident in that we have kind of met that criteria. Maybe I shouldn't have taken that trade. So we don't have too much time left in the session. We may or may not get tapped in. Let's see, we've got a couple candles. I think I'll probably use this last red candle right here. This is my potential entry. I don't know if we'll get tapped into this or not, but we'll give it a shot the last kind of 15 minutes of the session. Put our second partial at 10R, which is basically 50 pips. And I'm going to mark, just so I have like a reference point, I'm going to mark like a vertical line here, basically at 9, to make sure I don't go past this. So if we don't get tagged in right here, flight fault. If we don't get tapped in right here, I'll just cancel the order. And then the second thing for the invalidation is we want to make sure we don't go past the kind of midpoint of the range. So from the high to the low of this recent range, I'll just use, I think I have a premium discount. We don't want to hit this 50% midpoint before we get tagged in. So also if we hit this kind of before entry, then I'll also cancel the order. So it doesn't look like we're going to get tagged in. Maybe it will work out. We'll see kind of when we play forward, but we're outside of the 1 hour window. So this is automatically gone from maybe an A+ setup to a B or a C setup. It could still work out, but I'm going to cancel the order and just go to the next session and just say, no fill during London 1 hour window. And we'll just make a kind of comment there. Let's delete this, go to the next New York session. And look at that. So it did play out. And again, this is maybe you can, if you want to test this outside of his specific trade windows, maybe New York session isn't realistic for you to trade. You really want to focus on London session specifically. He had some visual. I'd have to look through his X a little bit. He shared a graphic that basically says like the best windows to trade specifically for Forex in terms of like volume and liquidity. And it did seem like it was kind of 8 to 10, maybe, and then it started to fall off kind of late London session before New York. But as you can see here, we could have gotten tapped into this and caught at least the 3R. The rest would have come break even. But it was the right idea for sure. Just unfortunately kind of fell outside of our trade window, which is totally fine. So let me see. Now that we're in New York session, still have the same idea, to be honest. I'm sticking to this bias until proven otherwise. And again, I might be wrong. Maybe this is the start of a just meltdown, but I still feel pretty strong. We haven't come into this decisional supply level yet, and we're forming some relative equal highs up here. So I'm still pretty confident, looking for potential longs if we induce this maybe low and then start to see a reversal. We didn't induce it. We've actually just formed some relative equal lows here. So I probably wouldn't personally take this. If we had swept this low and started to reverse, then maybe that would be an area to look for. There's this maybe internal low here, but I would have liked to see this low get taken personally. So this is something, again, maybe this would have worked out if we would have used this inducement low. I'm going to mark it out. I'm not going to go back and record it because I wanted to see that other low taken, but if we would have used this intermediate inducement, let's see, we could have had again, no super clear breaks of structure until like maybe right here. Maybe that wasn't a break of structure. There wasn't anything, or maybe even just like internal right here. Maybe you could classify this as a break of structure, and then we potentially could have had a retrace into this demand zone down here. So this trade could have worked out. I didn't take it because I was waiting for this lower level, this more clear liquidity level to be taken. So I'm not going to go back and record it, but that's kind of what the analysis was, and we might have the right idea, just didn't quite get it with execution. So I'm going to go to the next London session, and there you go, boom. Almost, yeah, to the tick to our decisional supply level. These are going to be really good draws on liquidity. You can kind of ride the same bias until you visit those levels, at which point you might want to say, okay, we've been riding this great trend. I want to secure my profits. I want to maybe start looking for some reversals, because as we see here, these levels are often pretty strong levels. And again, just showing you guys the specific drawing for it. It's basically this last kind of green candle before the move to the downside is kind of how I drew it. And yeah, big reaction off of it. So let's see if we can catch any more trades. I want to try and at least get one more trade live with you guys, and I'll show you kind of how many. I was able to test a few more before this with you guys. So we got this reaction here. Let's see if we can see any sort of potential inducement and break a structure. So we got a reaction here. We have a buildup of some relative equal highs right here, and we also have our kind of low time frame supply right here. This would be a pretty aggressive trade, immediately coming off of this, but we have had a break of structure. If we could have a potential inducement, we could maybe try and hop in this as a short. Again, I would say it's a little more aggressive and counter trend. And before we see, more confirmation on the 15-minute that we have like really started a downtrend more. But we'll give it a shot and see if it comes up here. It tags us in. It might not, get all the way up there. But we'll give it a shot. I'm probably just going to go for the simple 3-to-1 since we're counter trend and this is a little more aggressive. I don't want to go for a crazy 10-hour trade if we're against the trend. And again, we got to check our invalidation. So of the recent move, kind of from the low to the high, if we tag this midpoint prior to entry, I'm going to cancel these limit orders because that's one of his core invalidations. And that's pretty much what happens. So unfortunately, just didn't get the inducement in this case. It could happen maybe a little later or in New York session. Maybe we come up, induce these highs, form that break structure. We can maybe look to catch it later on. But for London session today, we've already retraced to the midpoints, and I'm not going to try and chase this any further. So we'll just cancel this and go to the next session, which is New York, I believe. Yeah. And see if we have any more information. So got a really nice reversal. If we were looking a little further along, we saw there was a really nice inducement right here. It wasn't the kind of initial one that I wanted, but again, with the same model, you can look for continuation. So last green candle here, we had an inducement. We had a reaction to this supply level and a really nice melted downside. So if you were trading a little bit further past the kind of core first 1 hour London session, this is a potential trade you could have taken. It wouldn't meet all of its criteria, and it had that midpoint invalidation. So it definitely wouldn't be a super high probability setup. As you can see, it would have worked with the kind of similar entry model. So let's see what we have on the 15-minute time frame to see if we want to continue looking for shorts, or if now we're starting to see more information to kind of come back and revisit this level. So not any like super great inducements on either side, to be honest. We've just tapped into this level and started reacting to the downside, but we haven't really had enough price action to develop yet to really see any sort of inducement until right here. Okay, so this is one potential sign that we want to continue lower. So we had a internal high taken right here with a little inducement, followed by a break of structure. So this is potential information showing, okay, the sellers are clearly in control right here. And maybe I want to look for continuations back to one of these decisional demand levels. We have a great one down here. It's going to last red candle before the move up. We also have kind of a intermediate one. This is, again, not going to be maybe as strong, but yeah, I would say we're probably going to take out some of these levels. So I'm going to just stick with this one again, trying to focus on the kind of start of the move for those decisional levels. The decisional supply and demand is basically like the origin of these moves. So I want to try and be a little more specific with my drawing of these. And so, yes, there's a potential demand zone right here, but it wasn't at the start of this move. And so I'm not really going to try to get super cute with every single level. As of right now, I know sellers are control on the recent trend, and I'm interested in potentially hopping in that. If we see some sort of inducement, we're already outside of the New York window, so I'm just going to the next London session. And we saw exactly what we expected. Just this one happened over Asia session, so we induced these highs. We then had a really nice break of structure. So sellers are clearly in control. We're still potentially drawing to this decisional demand down here, so I could potentially, another inducement right here. Price took out these highs, failed to displace, formed a break of structure. So sellers are clearly in control. I don't honestly know if we'll have a chance to catch this. Like, it actually looks like a 1 hour before London opened. It might have been would have had a great opportunity here. So again, I'll just kind of draw this out for you guys for example. For those of you that want to maybe look at trading additional sessions, actually this one wouldn't have had entry with it, because by the time you had the break in structure, there was just no inducement and retrace. So it formed that reaction without his specific entry model. So see if we can get price to build up and form any sort of inducements. Again, we are already outside of that 1 hour London window. We could potentially see, yeah, again, if you wanted to trade a little longer, you could extend it. I'm going to stick to his kind of 1 hour windows and just go to New York session specifically. This one looks like it happened like a couple hours before New York, basically late London session. But again, another inducement. Just outside of his core windows. Let's see if we can induce this high right here. This is a potential entry for us if we induce this high and get a reaction to it. Perfect. So zooming in here, you can see we barely took this high and started to get a reaction. Let's see if we have some more context on the 1 minute time frame. We don't yet have a break of structure, so that's the first thing. I need to see that break of structure. So I'm just going to play things forward. Okay, there we go. Now we have our inducement, we have our break of structure, and let's see if we can retrace into one of these kind of low time frame levels. So I need to see some sort of inducement. So there's no internal highs except right here. We have this kind of 1 minute high. So unless we form some more internal structure, I would need to actually go for inducement of this high for my entry. So that's kind of where I'll place the position tool right here. It honestly might just kind of melt down to our targets kind of before the trade. And this is a tough one with the premium discount because it's a continuation trade pretty late in the move. So we are pretty clearly into discount, which is going to make this trade a little lower probability by default. But if we kind of come back up here and form that inducement, we could potentially still have our criteria. So let's play things forward a little bit, see. Yeah, I think it's probably just going to melt to this demand zone without giving us an opportunity, unfortunately. But the entry for this would have been, okay, we have the inducement, we break a structure, and then if we have a low time frame inducement into a low time frame supply, that's where we would have entered for this. It just didn't happen with this specific example. So there's going to be a lot of days you're not taking trades, but hopefully the framework is helpful for you guys. And like when we do get tagged in, we have like a higher probability on our hands. So honestly, now I'm just kind of waiting to see when it taps into here, and maybe we'll see a reversal. So let's go to the next London session, and there you go. It actually went quite a bit ways below it. We actually induced these 1 hour lows over here, and actually came a little lower to this. Maybe I should have drawn this lower one instead. Again, I'm not as experienced as Waqar with this strategy. Maybe he would have used this lower level a little bit lower as the true start of the move. It's probably a little better. So we'll go ahead and say this is kind of the better zone to use for this. And yeah, really got a really nice reaction to it outside of our window. So now let's see if we can see any sort of inducements. We kind of have inducements on both sides, but the most recent one was to the upside. So we took out this low, induced this low, and formed a breakage structure to the upside. So the most recent price analysis is we reacted off a 1 hour level. We formed a breaking structure to the upside. Now we are starting to induce and continue to the upside. So expectation is that, and I'm interested in potential longs going into this day if we can see some sort of inducements. Again, wasn't anything on the 15 minutes. Was there anything on the 1 minute we could potentially look for? Yeah, potentially this really low time frame inducement right here. I don't believe we would have had an entry unless we kind of combine these two. Actually, this potentially would have been one. So I'll go ahead and just record it for you guys. Again, I'm trying to just look for examples. As you're recording this, I encourage you to try and be as specific with the rules as possible. So there wasn't any 15 minutes inducement, but there was a 1 minute inducement. So maybe as you're backtesting, you can use different tags to kind of differentiate those two. I've been mostly using the 15-minute ones that are a little cleaner, but we did have inducements, as you'll see shortly, break a structure, and then a retrace into a demand level. So I think this could meet his criteria for those reasons. So drawing out the demand zone is kind of the last kind of couple red candles before the move down. We'll use the 3-to-1, take profits. And again, this could be a pretty big continuation because we've rebalanced this entire move. We have, come into this really strong demand level, starting to see move to the upside. Likely are going to come back and, take out some of these highs, maybe fill some of these high time frame imbalances. So there could be a pretty big move here. I'm pretty comfortable looking at the potential 10-to-1 take profits on this. So we'll place the order, 5 pip stop loss, partial at 3R and a partial at 10R. So we got all of our orders auto-populated. and let's see how this our 10R is all the way up here. So I'll let this one play out, and I'm gonna kind of go candle by candle initially to see where I want to go break even. Okay, we haven't taken that high yet, and right here, you can see we have now made a new internal high. So break even at this point. So this trade can only be a win. I'll double click my stop loss for break even now, and just letting it play out. So we caught 3R there for 1.5R. I'm already done with my trading session, so we'll go to the next New York session. See where things are at. So this trade is still active. We haven't yet hit the 10R. We've actually been kind of building up some liquidity, induced it, and moved to the upside. So coming into New York session now, and sometimes he said it takes London and New York session for these trades to play out. So we'll continue just riding this. It's either going to come back all the way for just 1.5R, or we'll ride it further for the 10R. Really, like I said, the inducement was a little bit earlier before New York, but a little more pre-market. So really just kind of letting this play out. It ended up coming back break even on us. So potentially, like, as you get more data on this, I would say the earlier moves are probably going to be a little lower probability to really take off. It's more late in the game, like when you're really confident. Like I said, back here, we were super confident in this draw on liquidity. We had already clearly established the trend. There were multiple inducements kind of proving that. These are the cases where it's going to be more higher probability to really see those large moves. Again, markets don't like to move immediately, or don't like to change directions immediately. So maybe the next attempt, if we have another long attempt here, we could potentially go for it. But we still got 1.5R on that, and we're at least positive on the account. So again, haven't been able to take too many trades. We went from basically, I think, what did someone tell me? Like November 26th is when we started this. So we tested basically a week and a half, and we took maybe 2 trades with this. So he's very, very selective with this. We did definitely identify a couple trades. We had the right idea a lot of times, just didn't meet his specific entry criteria. So you could also potentially set some alerts at like clear inducement levels and maybe trade this additional time periods outside of when he trades. But hopefully you guys at least got an understanding of how he actually trades this. And so with that, I'm going to go into some analytics now. We don't have a ton of trades, but I'll kind of combine these 2 sessions that I've created. I'll show you guys how to do that real quick. So in the strategies tab, I've tested a bunch of strategies in here. I'm going to add Waqar Asim Forex Scalping as a new strategy. So I've got the strategy created. And then now I have a couple sessions here where I've been testing this. I'll edit these to make sure I tie that strategy. Oops, use a shortcut that I didn't mean to. Sorry, I gotta get used to the new shortcuts being on the dashboard. So I'm gonna come in here, try to find the Waqar Asim Forex Scalping. I'll tie it to this testing session I had, as well as the session we just saw right now. So my strategy is basically tied to both of these sessions. I can view the analytics on both of them. If I come in here now, and let me find Waqar Asim. I've got so many strategies I've tested in here. Where is it? Here we go. All right, so it'll be a little easier if I kind of zoom in on the testing I was doing before. So since we didn't get through that many trades live, I thought it'd actually be a good idea to show you guys some of the trades I took when testing. Just so we have a few more examples to look through. So I'm going to come into this previous session and just kind of walk through a few of the additional trades that I was taking for you guys. It was late in London session, but we did have some inducements. We got to break a structure. It took a little while. We got to break a structure, and I was looking for a retest on this low time frame demand zone. We did get an initial reaction, but just not quite enough follow through. And this one did not go break even, so I think this one was a loss. Let's see, this one, I think right here is one that I took. So we had price actually induced a high time frame demand zone. So we had this decisional demand from previously. I was expecting some kind of reaction, but we actually ended up inducing that zone as well. So sometimes the reversal happens within the zone. Sometimes it takes the full zone out. It's kind of either can happen. But coming into this, we were in our New York session window. We had the inducement, break a structure, and we retraced really nicely into this demand zone right here. I think I was initially going to go break even up here, but then we formed this kind of nice internal high. Came really close to our stop loss on this one, and eventually wrote it out for a nice 3R. I don't think this one eventually hit the 10R threshold. I think it came back on me. The rest of it, it ran up like 7.5R, unfortunately, and then the rest came back break even. So didn't quite hit our take profits, but cut a nice 1.5R with that one. This one I think was break even. Yeah, we had an inducement breakage structure retraced into our supply, went break even here, and unfortunately hit our break even before the 3R. Let's see, this one, that was the one I canceled, and I think it caught a win right here. So we had some inducement, breakage structure, retrace into demand level, tapped us in, would have gone break even after this internal high, didn't quite come tag us break even. So we rode this. This is actually our nice 10R win. So we had our initial 3R TP right about there, kind of at the end of the session. He says 15 to 20 pips is typically a nice move for the session, but then we had to hold the runner pretty long. It actually took all the way into kind of the end of New York session before we were able to finally TP the rest. But this is an awesome, like, full 6.5R win that we caught from this inducement breakage structure. I'll show you where the breakage structure was right here. Breakage structure right there. Template, breakage structure, tap into the demand, and cut a nice reaction off it. So that was a really awesome win. I got through about 16 trades. I think, I got through a dozen or so when I was testing this myself a little bit before. And overall, I was seeing not quite his 69% win rate, but again, I'm new to this. I don't know I don't have as much experience trading in it. And this is a very low sample size, so you really can't say definitively, oh, the strategy is not 69, it's 55. But this is still like a pretty solid equity curve. 7 of those trades were break even, so almost half the trades I took went break even. I'll be interested to see if the simulator has any insights on that. But in general, we collected 2.5R on average. So of those, some of those trades went 1.5R. At least I had at least 1 or 2 trades that we caught the full 6.5R from both partials. Again, there's not a huge sample size here, so I don't want to spend too much time digging really deep into the analytics. It's going to be more important as you get this, 50, 100, 200 trades. But overall, it is a profitable model. I do think he's actually shared quite some proof that he is a profitable trader. So I would expect this is a profitable model. It does seem so from my initial testing. Analyzing the different sessions, we had a slightly higher win rate in New York versus London. We took more trades in London than New York, but we caught a higher average return. I mean, we must have hit one of those 10R trades in London session, because all the New York trades were just 1 or 1.5R. And so we did have a little more profits in London session compared to New York. I'm not going to go through the performance by time and day. Again, you need more data on that, but let's just take a look at the risk reward simulator just to see a little bit of information on this. So again, this is going to be 10 times more reliable when you have 100 trades or whatever. But just to show you guys kind of how you can use this as potential insights, this is basically saying, okay, in our base model, we used the aggressive break even. We took partials at 3R. We left the runner for 10R. That's how I executed my base model. Actually had a pretty good profit factor, 3.13. And from this simulation, based on very little data, it says without any trade management whatsoever, you could have gotten a higher profit factor if you just took everything off at 3.5R. And so as you guys get higher sample size, I really encourage you to take advantage of this risk reward simulator and see, do I want to trade it with his style? Do I want to maybe trade a little simpler? In this case, my win rate wasn't affected. I would anticipate as you have a larger sample size, you're going to see reductions to win rates without using his break-even method, but you also might catch more profits. So it's going to be kind of a trade-off between the two. But yeah, the risk reward simulator is going to be super helpful to show you guys, kind of compare his execution style with different options and maybe find something that's a little better for you. But yeah, I think that's kind of everything I wanted to go over with today. Hope you guys enjoyed this. I know I got a lot of requests for this, so hopefully I did a decent job of trying to simplify his pretty complex model. Again, it's definitely more of an advanced model, but even if you don't want to trade the specific model, hopefully the concept of inducement and using it to really help identify who's in control of the markets, as well as those high time frame supply and demand levels. Even if you don't like trading his model, maybe this is a good framework for you to potentially help identify directional bias that you can use outside of this model, just with your own trading parameters. So I hope you guys found it helpful. I think we'll have another one of these next week. So feel free to RSVP. I think we've already got it set up on YouTube, and feel free to pop in the Discord. If you guys have any questions, share in the comments once this recording's out. If you guys had any key takeaways, or if you have any other strategies you want us to take a look at. But with that, we'll wrap it up, and I hope you guys have a great rest of your weekend. See you, everyone.